May profits be upon you. Welcome to another weekly market forecast. In this video, we're going to go over the S&P, the NASDAQ, and Dow. We're also going to look at gold and silver. All right, we're looking at the futures. All right, we're looking at the futures for these the equity markets and the commodity markets. All right, so bear that in mind. Okay. Let's take a look at the economic calendar for the week ahead. What I like, as you see, Monday through Friday, is that on Monday we have some U.S. news. So there'll be some volatility in the markets, enough juice that may produce some nice setups. Nothing too much on Tuesday, but on Wednesday we have the all important for FOMC. We're going to see what the Fed has in store for the U.S. economy. The expectation is that they'll leave the interest rate as is at the moment, but we're going to entertain the thought that there might be a interest rate cut surprise due to the fact that the GDP came in such that we are showing contraction for the first time in years. So this past quarter. So that's something that that might raise a couple of eyebrows for the Fed, and it might if there's something that would move them to cut interest rates in this meeting, that would be they would point their finger at GDP numbers. But we're just keeping that in mind. That's all. The expectation, though, or the overall expectation, is that they'll leave the rates as they are. And Thursday and Friday should be very tradable days, but you may see some contraction before FOMC. You might see some markets kind of range a bit. Now we're going to start with the S&P. We're going to look at all three at the same time. All right. When I break it down, we're looking at the monthly chart. All right. This is S&P futures. We can see that price, after it ran into this demand zone down here, rebounded sharply during the month of April, and it came down and pushed back nice and hard. And we're going to observe that there is a monthly fair value gap here, a bearish one. All right. And price is working its way up into that. And I believe that we should be looking at a bullish S&P, a bullish NASDAQ, a bullish Dow until it reaches that area above. Now, on all three of them, it's not the same same path to travel, but we're really looking at is PD arrays, right? In this, on the S&P, you'll see how I'm breaking it down. On the S&P, the premium array is the this bearish fair value gap on the monthly, right? If we go to the NASDAQ, we have that same bearish fair value gap, but you can see that the NASDAQ has already reached it, all right? So if we're looking at just those two, going back to the S&P, this is what that dotted line there represents. Let's get closer. This is what that dotted line represents, SMT. SMT is nothing but divergence between two correlated markets. That's it. Like, we're using the S&P, the NASDAQ. You can do the same with the euro and the pound, or the euro and the Aussie dollar, the pound and the New Zealand dollar. You can, those are correlated charts. And when one is making a higher high and the other one is not, that is an SMT, or they are diverging. And there may be something there, that's letting you know that, hey, this is somewhere where there's an opportunity to take a trade. In this one, price carrying that bullish momentum upward. And I believe it's going back to the area where fair value will be offered. You understand? That's why it's going to a fair value gap, because nothing but sellers took part here. We want the market wants buyers to take part in this price area as well. That is the offer of fair value. So it's a draw on liquidity. This is an interior interior range liquidity, while highs and lows, swing lows, are exterior range liquidity. So the way the market moves is from exterior to interior, and that looks terrible on the monthly. All right, if I can make a straight line on this, matter of fact, let me do it this way. Sorry. All right, we go from a low, that's going to be exterior range. We go back inside this bearish leg, that's interior range liquidity. We're looking for a fair value gap or an order block, and then we go back past the low, which is external range liquidity. I said external range liquidity, and then we go back up for internal range liquidity in this leg. And what are we looking at? A lower low, lower high, lower low, lower high, lower low. We have a trend. That's what we have. That's the way it works. Okay, so I believe that we're going up a little bit further. But what does that say for here? We're already here. Well, once we go, hold that thought. That's why I said this is about PD arrays. Maybe we're not looking for this the price to reach this internal range liquidity here, this fair value gap. Maybe there's something else that price would find resistance to in order to turn back, and start pulling back and correcting this move. We'll look further, but let's look at the Dow, and you can see that bearish fair value gap there on the monthly, but we're nowhere near it. Okay, so but where are we? If we go down to the weekly, you see that we are in a weekly fair value gap. All right, this same weekly fair value gap is not present on the other ones. So this is where we'll find that premium array for the Dow. This is where we'll find that resistance, that potential resistance anyway, that will have price turn around from here. All right, as opposed to waiting until the S&P turns around up here. But look at the distance that needs to be traveled. That's what I want you to notice. All right, look at the distance on the S&P. Look at the distance on the Dow. All right, a little further, just a little further up, and then we could find that resistance that will turn price back around. We don't know if it's going to turn around or not. We just know that this is an area that price could find resistance. If we go to the NASDAQ on the weekly, you can see we've with that SMT there, we can see that we've already reached the fair value gap, the monthly. Could we be looking to reach that liquidity, that buy side liquidity here? Is that, look at the distance. Look at the distance that it needs to go there, that it needs to travel. This high is a swing high. And after a swing high, what do we expect? A retracement of some kind. All right. After we take out swing highs of buy side liquidity, we're looking for that external range liquidity there. We'll be looking for internal range liquidity here. And it could be building a fair value gap this coming week. We don't know yet. We're still forming things. So that's something to watch out for. Now, I'm going to take us down to the daily. All right. I hope you're with me. If you have any questions, please make sure you ask in the comment section. I like to answer questions, but you got to ask them in order for them to get answered. Now, look at the distance for the S&P. All right. To get to that area before we start to see a turnaround. It could happen at this high or this high. This could be the ultimate high, and we are still within the monthly fair value gap area. If I can grab it, yeah, the monthly fair value gap area, but there's a high there that could act as another confluence that of resistance that could allow price to start to turn around, and we can get a pullback. But we have this initial near term bullishness. If we go to the NASDAQ, we're already here, travel the same distance to the top, and then we can turn around. All right. Now, again, we're on the daily, but last week I told you, I gave you on Thursday, hey, prices heading towards this bullish fair value gap. I think we'll find support here for higher prices. And I even drew this little arrow there, and you see how it turned out. Right on point. Make sure you slap that like button just because of that. All right. And subscribe, because I'm giving out good stuff. Man. All right. So are we going? When are we expected for price to turn around from these levels? Not quite. Even though we're running into what could be considered a bearish fair value gap, but this is an old one. It could act as a speed bump before we reach the buy side liquidity here. We're going to find out in a little bit. All right. Do we have anything similar on the Dow? We're in this weekly fair value gap, and there's a daily fair value gap that price is in right now, and this is a bearish one, and this is where prices already have tapped this area once before here. All right, so we don't. I don't regard it. I don't regard it as, hey, prices. The fair value gap is still holding. We'll look at the highs. That it left behind. Price is taking that high, and there's a good reason for price to start to pull back. All right, and there's also this volume imbalance here that price could wake up to and then turn around. Never closing above that weekly fair value gap. There's a couple of scenarios, but I'm looking for price to turn around for a brief pullback. I am, but we got to go higher first. All right. The possibility is that price could continue up higher. If we get a tweet or something crazy in the news, you never know. Now let's look at gold. All right. That's where I'm at on the indices. Let's look at gold on the monthly. We can see how we started this new month in a bearish way. All right. If I can get this out of the way for a second. All right. We started this new month in a bearish way. All right. Prices pulled down, and now it looks like we're leaving that wick, and maybe we'll be making a bullish fair value gap here. It remains to be seen, but we are pulling up now. And if we go to the weekly, all right, you can see, we are very bullish. And gold has had an excellent run, Make no mistake about it. Are we in? Is it time for a pullback? This looks like the pullback has started, and we have the follow through from the previous week, last week, and the week prior. We had the follow through last week. You see how it closed below that low, and that would allow me to think, yeah, we're going to see some more movement to the downside to take out. Looks like a relative equal lows there. If we go to the daily, you can see how when it was moving up, it created this area of fair value. This is where we'll find our demand. And price is right upon it now, just shy of our fair value area. All right, and just above that are those relative equal lows. I would love to see price. Oops, I don't know what just happened. Okay, let me do that. Let me get it together. All right, there we go. All right, now, what I would like to see is price take this low before moving up. I'm looking for a bullish turnaround here, because if you put the fibs on, if you put your fibs on there from the low, swing low to the swing high, move it over to the side here, you can see that price is pulled back below the 50% and just above the 618. If price takes that this is the golden area, the golden ratio, 618, right? This is the mid, this area is where I'd love to see price come back to. If I can draw it. Yeah. I would love to see price come back into this area between 50 and 618 in order to find support for higher prices. This is a great area where I would expect some kind of reaction from price. If we look at silver, we can see on the monthly a very harsh move here, down, sweep, a good sweep of the sell side liquidity, and then that sharp rebound on the monthly. Bow. That was April. This is May. We've opened up. And then started the bearish movement down, leaving a small wick on top. Are we going to continue down? That is the question. If we look at the weekly, we can see that it formed this bearish weekly fair value gap. I have it in gray here, right? And I spoke about it. I said, hey, when price gets up in here, I'm looking for price to turn around. And that's exactly what it did. But I was looking for a 2-candle rejection, one in, one out. It was 3. All right. 1, 2, and then 3. And the last week's candle close was below the previous weekly candle close, which allows me to think, which suggests that we'll see more bearishness after that. So I'm expecting more price to the downside in silver because it's weaker than gold. It's weaker than gold. But to what end? There is a bullish fair value gap right here. All right. And we had a test of it already. Price is filling that wick. Price is filling that wick, and it could come back down to this to that low, to test that low before pulling up. It could. All right. I'm not expecting price to come back down to these lows because that recovery was very sharp. All right. But you can see that you see that strong push to the upside. We've taken that low. So we are bearish in this market. All right. It's weaker than gold, like I said. All right. But I doesn't mean that it won't turn around after it takes this low. Doesn't mean we won't find support and then get dragged up behind the move in gold. Again, we'll go back to gold as it taps into this area of fair value and pulls up. All right. So if I'm going to take a long, I'm going to take it in gold. If I'm going to take a short in one of the metals, I'm going to take it in silver. If silver breaks through this fair value gap, all right, and closes below it, then I'm going to definitely look for the bearish fair value gaps that price could come back to and continue down lower from. But I would once it takes this fair value gap here, this will allow me to start thinking in terms of shorts in silver. Got it? Good. I'm going to put out another video for oil this week. So you want to watch that. You want to make sure you catch that. All right. Look out for it. Make sure you subscribe so you can get the notification directly. All right. All right. If you have any questions about that confusing time frame alignment that I have for the S&P and the NASDAQ and the Dow and how they relate to each other and how you could put one against the other when you take your trades, to take the best one. You don't want to take a trade in all of them. You want to choose the weakest one, and you want to choose for shorts, and you want to take the strongest one for longs, right? Okay. So, and don't forget to check out my video that I already put out for the Forex market. All right. The major pairs. All right. I already put it out. So I'll leave a link in the comment section or at the end of this video. You might be looking at it right now. Anyway, trade safely. Thank you for watching.